Could the halving cycles of Bitcoin power it through an imagined post-COVID economic disaster? Or is Bitcoin doomed to be correlated with stocks? After the cryptocurrency market fall, what will the repercussions be? Stay tuned, because we are going to address all of your concerns and issues in this video. Avoid missing out on anything at any cost. Additionally, ensure that you subscribe to the Billionaire Crypto Investor. So without further ado, let's get the ball rolling here. Both the birth of Bitcoin and the beginning of an unparalleled bull market on the stock market in the United States both took place in the year 2009, and the latter has persisted nearly without interruption since then. Despite this, there is perpetual evidence of a collision, and the sound of it has been growing increasingly louder recently. In spite of the persistent presence of COVID-19, the stock market continues to make new all-time highs, helped along by an unparalleled level of support from the government. Is it reasonable to expect a decline in the stock market now that policies designed to stimulate the economy through the use of quantitative easing have been phased out? If this turns out to be the case, it could spell bad news for Bitcoin, BTC. One may make the case that there are indications of a substantial correlation between Bitcoin and stocks since this argument has been made. So what could happen to cryptocurrencies if the market for US stocks completely collapses? Let's see what are the chances of a collision. If we remove cryptocurrency from the equation, the growing conjecture that a crash is just around the corner does have some basis in reality. The annual percentage rate of inflation in the United States was substantially greater than was anticipated in the month of June. In the meantime, the government kept issuing bonds and racking up additional debt, to the point where there is now discussion about lifting the ceiling on the amount of debt that can be owed. The continuous relief effort caused by the pandemic is, of course, the basis for this action. However, the government continues to inject money into the economy, despite the fact that other indicators, such as the price of US stocks, suggest that relief is not required. Real estate markets in the United States are also booming, while the Federal Reserve has already voiced fears that investors are becoming increasingly irresponsible. As evidence, the Fed cites investors' voracious hunger for joke stocks and cryptocurrency as examples. There is a point at which all of this money that is being pumped into the economy will have to stop flowing in, which has led to the reasonable conjecture that a crash may be the unavoidable outcome. Cointelegraph contributor and full-time trader Michael Van de Poppe feels that the anticipation of a major correction is justified. He adds that Toya Zhang, marketing manager at AAX Exchange, agrees that a crash is coming but cautions against attempting to predict when it would occur. According to Zhang, given how common stock market drops are and the fact that the market is somewhat overpriced, I think there is a relatively high possibility of a stock market downturn. Given how common stock market losses are and the fact that the market is somewhat expensive. However, nobody can accurately predict when exactly that will take place. Correlated at the moment, but how long will this continue? One concern that arises is as follows. To what extent were the recent market recoveries in crypto and the stock market in March of 2020 linked to one another? The majority of stock market analysts were taken aback by how quickly and robustly the comeback occurred. Despite this, the fact that the S&P 500 is dominated by technology businesses explains a great deal given how rapidly the world has transitioned to a digital economy. On the other hand, the story was told quite differently in the crypto realm. The majority of people were taken aback by the fact that Bitcoin had acted in a manner that appeared to be similar to that of equities, especially given the lack of any alternative explanation for the crash of the cryptocurrency market. After all, it had been assumed from the beginning that Bitcoin was uncorrelated and would function as a hedge against more traditional asset categories like stocks and precious metals. According to the most recent experience, the course of history would seem to predict that a crash in the stock markets in 2021 would be followed by a crash in the cryptocurrency markets. One possible alternate outcome is that the stock market has a precipitous decline, and investors promptly start moving their money into cryptocurrency. Even without the benefit of hindsight from March 2020, it appears improbable that this will occur. Even today, cryptocurrency is known for its notoriously erratic price movements, and its efficacy as a sanctuary of refuge in times of economic turmoil is mostly unproven. However, the events that take place after the crash can provide for a more fascinating discussion on the correlations between markets. What if, this time around, the stock markets do not immediately begin their process of automatic recovery? Given that the effect of the pandemic is now factored into market prices, and that there is significantly less uncertainty than there was in March of the previous year, This scenario can be considered a plausible assumption. What would happen to the price of BTC if the stock market in the United States experienced a protracted period of flat or even declining prices? The most compelling premise for the argument that Bitcoin is uncorrelated to stocks is that Bitcoin has its own market cycles, which are linked to halving, that dictate its price movements in a much more compelling way than any external economic forces. This premise asserts that Bitcoin's price movements are determined by its own market cycles. When seen through this prism, it is plausible to hypothesize that regardless of whether or not the stock markets had recovered after March 2020, Bitcoin, BTC, would have continued to attain new all-time highs regardless. However, even when measured against the ever-reliable stock-to-flow BTC price model that was devised by Plan, prices have been struggling as of late to remain inside the limit. In spite of this, the recent rise indicates that the model is still accurate, and prices are currently displaying substantial promise of a durable rebound. Therefore, even if turmoil in the stock markets were to cause chaos in the cryptocurrency markets, there is data that predicts that the Bitcoin market cycles could eventually resume their seemingly ironclad control of prices. This is the case regardless of whether or not the stock markets experience turmoil. Now let's discuss confrontation between competing forces. There is currently no evidence to imply that the price of Bitcoin will not follow a short-term drop if one occurs. However, this could change in the future. Assuming that this will take place in 2021, the events that will take place beyond this point may become a battle between the market cycles of Bitcoin and the impacts of a protracted economic slump. If, on the other hand, the influence of the former can surpass the effect of the latter by even a little increment, this would make Bitcoin an attractive asset to own as a safe haven, in the absence of many other alternatives. To keep attracting investors, Bitcoin merely needs to keep its value stable, even if everything else in the market is falling. But let's say that the Bitcoin halving cycle turns out to be capable of completely nullifying the impact of a sustained decline in market price. In that scenario, Bitcoin, BTC, might be one of the only assets that continues to provide the potential for big profits even during a bear market. According to Sean Ratch, co-founder of the blockchain services firm Hive, which is a non-profit organization, crypto will eventually become an attractive asset for people who are looking for alpha. According to Ratch, the growing discontent with the financial system, in addition to the history of all fiat currencies, indicates that the hunt for alternatives remains a positive factor for the rise of the crypto markets. In the meantime, Matty Greenspan, founder and chief executive officer of the consulting firm Quantum Economics, told the publication Cointelegraph, "At the end of the day, it is important to keep in mind that accidents are transient occurrences. They may be unpleasant, but looking at the situation from a more distant perspective is when things start to get intriguing. Imagine that the overall economy continues to improve, but the stock market remains in a bear market for an extended period of time. In that situation, it is possible that it will turn into an opportunity for investors to snag a deal once the price of crypto has reached its lowest point. As a result, while it may be difficult to prevent a link in the short term, there is every possibility that cryptocurrency might outperform the markets in the long term." What do you think the repercussions of the recent decline in the value of cryptocurrencies will be? Please share your thoughts with us in the comment space that has been provided below. And with that, I'll see you all tomorrow. If you enjoyed the video, that's fantastic. However, without your support, we won't be able to produce any more videos like this one. So if you want to see even more amazing content, please subscribe to our channel.